Everybody, it's Rob Keynes at 𝙃𝙊𝙇𝙑𝙊𝙒.com. We're here at the New Orleans Investment Conference, and I have two very special guests here, Chris Temple from the National Investor and Ian Everard from 𝙁𝙊𝙊𝙇𝙑𝙊𝙒. We're going to be talking about, is this the new economic normal? What does it mean for policy? And what does it mean for gold and silver? Let's get started. So Chris, we were talking before the video about the economic situation. You were mentioning a lot of factors going on with, are we going to spend the money in the infrastructure bill? Is it going to be approved? And is this a new normal for the economy, that we just kind of keep blowing this thing up forever? What are your thoughts on that?
Well, I'll tell you, Rob, you go all the way back to the early 1980s, and the very pivotal thing happened in monetary policy history, and it's not what is commonly discussed about a man named Paul Volcker. Everybody else remembers that Paul Volcker, in the first part of his tenure as Fed chairman, jacked up interest rates, tightened money to try and kill the inflation and weak dollar and all that of the late 1970s, which he did successfully at the expense of a recession at that time. But the forgotten part of his legacy, and a more important part, came after that, when he did a total 180 and he created and set in motion the modern day situation where the Fed now channels monetary and inflation and increasing amounts of it is into asset prices as a first matter. So it used to be that the real economy did thus and so, and prices and financial markets reflected that real activity. Now it's been turned upside down, and Paul Volcker started that. You know, we were all hysterical over $40 billion annual deficits under Jimmy Carter. What did they become under Reagan and Bush Sr.? 250, 300 plus billion. Okay? But everything was looking wonderful with those deficits. Why? Because the Fed printed ever more money. It went into the markets, created the wealth effect, and that led to consumer spending and business and stuff like that. The risk of that is that after a while, you reach a plateau of how much activity you can create in the real economy simply by printing money. And that's where we are again today, in my opinion. We've had trillions of dollars worth of money printing and asset buying by the Fed, trillions of dollars of fiscal measures to rescue us from this pandemic, as I call it, because it was, not to talk about the virus in a scientific means, but this pandemic that started last year was the means by which the Fed really amped up its monetary intervention. The Fed amped up a lot of things, the government did. And now we're at a place where, okay, we've had this huge sugar high, rising stock prices, huge recovery beyond anything anybody thought possible that fast. Same for the economy. And now we're seeing that momentum wane. And what's next for an encore? Do we have another 2008 waiting ahead because they're out of tricks? So we need to have another bust. And then they add a zero to the next QE program, and we start it all over again? Or where are we at? That's a real interesting question right now.
I think it's the interesting question right now, because they created 40% of M1 ever created last year in 2020, and now I think that's come home to roost, and we're starting to see some producer price inflation, asset price inflation, and not just in stocks and things like that that would benefit in helping build people's wealth. But I think it's starting to come down to commodities prices.
It is.
And things that people buy every day. And you were mentioning that, you know, what are next steps? What are the policy moves? I think you and I, Ian, have talked before about what are the bullets left in the Fed's gun? Can they go negative interest rates? What do they do?
Yeah, it's interesting. As a Brit, sometimes looking on in the US, I've only been in the country for 2 years after 10 years of visiting. I think we pay too much attention to what the Fed's doing, what the Fed isn't doing. It's definitely uncertain times, and to do nothing at the moment is a very dangerous thing, but to do too much in any one direction could also be dangerous. But the typical ways of battling this situation, or being just to weather the storm, the old tools just don't fit for any of us. So the more we can understand the big picture, who is pulling the strings, I think that's what's important. And the more I've looked into it, the Fed are actually pretty weak. And the research I've done would show that it's the Bank of International Settlements decide what the Fed is going to do or not going to do. And this information is hidden in plain sight. But even if you ask many modern day bankers, they've never heard of the Bank of International Settlements. So it's a time to really understand the big picture. Look at history, and look at motives behind what's happening.
And so the Bank of International Settlements, in other words, doesn't just influence the Fed, it influences the ECB and all of the other central banks.
I think it's 102 central banks around the world meet in Basel every second month in complete secrecy.
That couldn't possibly lead to any collusive market activity by the central banks.
Will
it never happened.
It is.
We don't believe that's going on at all.
And particularly on digital currencies, from what I understand, the BIS are coordinating. They've got a working party coordinating so that each CBDC is interchangeable. One world currency.
They are working on that exchange system.
It could be here within 2 years.
Yeah.
So from my point of view, and as you can guess, I'm representing 𝙁𝙊𝙇𝙑𝙊𝙎. How the heck do you get out of the system unreported?
So that's an interesting point you bring up. Could that be the answer? The Fed and the BIS's answer to this system? Maybe the fiat system is at its end. The dollar as we know it is at its end. And they're going to push the central bank digital currencies, the digital dollar, the digital yuan, digital, what are your thoughts on that, Chris?
Well, I think that one practical reason why they're talking about digital currencies is because it's something that is so now popular in the popular culture that they've got to try and become a part of this themselves.
Sure.
So my question is, with all the talk about these digital currencies, are they still going to be run by the Fed? Is the Fed still going to behave the same way they do now with its open market operations? Is the Fed still going to be presiding over what is still a fractional reserve system? All right. To me, when I hear people for years now saying, "Oh, we're going with cashless society," gee, I thought we already were.
Yeah.
Okay. We all carry plastic in our pocket. It is a percentage of all transactions. What we use now with cash is a pimple on a flea. All right. So now we may have a smaller pimple on a smaller flea. If we have digital currencies, what's different about the currency itself? Okay, that's what I want to know. All right. I think that part of this is an excuse and a diversion by the central banks to say, "Oh, good, they're keeping up with the times. Oh, good, they're going to give us all these newfangled ways to be able to do things." But has the system changed?
I don't think at its core it really changes, and I agree with you. They don't want to be upstaged by the Bitcoins of the world. Because if the private cryptocurrencies get traction, then the Fed's sovereignty over the monetary system is in trouble, and by extension the BIS. And perhaps that's why they're into that game now. But does it really fundamentally change the system itself? Does that transition to the CBDCs change the monetary system, the modern monetary theory experiment that we're going through? Essentially, that's an interesting question.
I don't think so. Not anything I've seen or heard yet.
Yeah.
I think on a deeper level, though, it's a perception. At the moment, most Americans have the perception that they can go to the bank and draw out their dollars in cash.
As long as you don't exceed $10,000 in most places. And
depending
on
or you give notice. I mean, my bank would let me theoretically draw the whole balance out if I give them notice.
Yeah, I had a friend in Oklahoma, sorry to interrupt you, that was trying to get $30,000 out to make some investments. And he had to order it like 2 weeks ahead of time. They had to ship the cash up to the bank. So,
yeah. So we have, I think, no one really knows how much cash is in the banking system. I've heard estimates of $2 trillion. Then the rest is in the system or abroad, physical dollars. But we're into tens of trillions of money of zero maturity, checking accounts, instant access saving accounts, stuff that theoretically should be able to convert into physical dollars the same day. So I think it's going to be a change of perception. When we enter a fully digital system, there is no escape from that system. You're trapped. So any of your earnings, sale of goods, sale of stocks, it will all go into a digital account. Now it's fully trapped. There's no secrecy. There's no privacy. That's what frightens me. And yes, you could argue, great, there'll be no crime, financial crime. But we're talking about financial repression here. What's coming?
Yeah. So let's talk about the precious metals here for a moment. Alternative to whatever system we're going to have. Will the precious metals be viable? Will silver and gold become money again? Will people gravitate toward those? Is there enough people in the world that really understand the value of that, in your opinion?
There's not enough people to understand, no. But for the ones that do, and are positioned, there'll be in an exclusive circumstance where they will have choices that anybody who hasn't got physical precious metal will not have.
So what's your view on that? Do you think gold and silver can ever become money again, or is that an anachronism of an age past?
It never stopped being money.
Yeah.
I mean, I don't know if the camera can pick that up, but that's Britannia. Britannia was first used on a Roman coin 111 AD. It became used in the British coinage in the time of Charles II in the 1600s. It's still in use today in Britain on the 50 pence piece and the £2 coin. Now, Britannia, the motto, is about never being a slave. Rule Britannia. Britannia rules the ways, never ever be a slave.
Right.
If you have precious metals, you will never be a slave. If you haven't, you're in danger of being entrapped in a system with no freedom, no choices, and no privacy.
What's your view on that, Chris, in terms of gold and silver ever becoming money again?
I think, and privately they can be, and I think there's a lot of people, whether it's gold and silver or tobacco and whiskey or whatever, and I think they all have their place that have got all different kinds of things like this to use among themselves as money. This is your mad money if the economy really blows a gasket or the financial repression, to Ian's point, becomes so bad that we're increasingly trying to find ways to live off the grid, which includes having to have something to use as money. As far as an official or reserve asset, again, we're way past that.
Yeah.
Number one is mathematical and practical reasons, and number two, because looking at it from an investment point of view as well, guys, how many people today, what's the percentage of individual investors that have any kind of automatic or philosophical affinity to precious metals? There's your pimple on a flea again.
At 0.5% in the U.S., basically.
Yeah.
Of assets under management.
Yeah. So look, there was a point, and I make this point in an issue of mine that deals strictly with gold, where you go back to the bottom of the market in 2008 after everything collapsed, including gold. Gold was one of the first things out of the gate. And gold in less than 3 years' time tripled from its bottom. And it didn't do it because gold bugs were buying it. It did it because generalist investors were buying it because they saw a set of circumstances in front of them and a narrative, lots of money printing, a question whether the stock market and the economy would ever come back, okay? And that is the reason why in the recent past, all of this quote inflation has not really helped gold that much, because it's helping everything else.
Yeah, the stocks.
Yeah, don't forget that in 2011 when gold peaked, the Fed didn't stop printing money.
Nope.
Neither did anybody else. But what happened is that more traction was being realized in the rebound of all the other assets that got hit. And today, whether anybody likes it or not, if the average general investor has a choice to buy stocks that look good or to buy gold that looks good, he's going to buy stocks that looks good, or she. All right, so what's going to give gold another lease on life again for a while? And I think we're on the edge of this. You know, I went sector bearish on gold at the peak last summer, told people to sell all of our trading positions. I just added back my first sector position in gold in recent weeks because I think we bottomed. And the reason I say that is that continued money printing or not, I said, you know, like I did at the outset of our conversation, that the sugar high, the rebounds in stocks, rebounds in economy is about to hit a bigger wall. But the Fed's not going to stop printing money. So we're going to be back, albeit at different price levels, where we were in 2008 in a lot of people's minds. Lots of Fed money printing, but now with not the traction that it had, you know, in the rest of the market and in general commodities as much. And so gold will disproportionately benefit, I think, in that environment.
So let's talk investments, because we are at an investment conference. What's your view on some investments that you're looking at the next 1 to 2 year time frame? Are you still involved in the stocks and general sectors like technology, or are you more looking at commodities, resource? Are you looking at cycle changes here?
I'm looking at themes. I'm looking at, you know, what can you do with your money where you're not going to get hurt if the general stock market gets hit. The biggest, I guess, single theme in resources that I've had for a year or so now has been uranium.
Yeah, and it's done very well.
It's the best no-brainer. It's likely to get hurt the least. Of everything the Biden administration is screwing up, even when it comes to green energy and stuff like that, which they don't know, they can't figure out one day to the next whether they're they're for it or against it, because they say they have all these goals for carbon reduction, and then we have an Interior Secretary wanting to shut anything in this country down that gives us the materials that we need for the green economy. But at least in the area of uranium and nuclear energy, they're in the right place, and the whole world is realizing that that is the single best way, not the only one, but the single best way to help us, with our carbon emission goals and getting those down. But I also love biotech. I've got a number of biotech and health stories, because they're, again, kind of like uranium. If you've got a company that has a breakthrough on an Alzheimer's drug, one of my favorite plays right now is closer in human trials than anybody to a functional cure for type 1 diabetes. When that breakthrough comes, I don't care what the Dow is doing, you're going to want to own that stock.
Yeah, it doesn't matter at that point.
Right.
So what are you invested in? Is it just precious metal? I know you run ARC Silver, so I know you're going to say silver. I'm a precious metals guy.
Sure.
Are you just all in on the precious metals, or do you look at other things as well?
The biggest investment I make is in research and learning.
Okay, in yourself, in
myself,
in your own development.
Yeah.
By the way, when I reimagined Exeter's pyramid from what Exeter had done when he was working with Paul Volcker, I put the person right above gold and silver on that chart at the bottom, because the improvements you can make in yourself can make you functionally more a better investor, also higher income earner, and those types of things. And I think people pass that by. They want to push their money into a passive investment and don't look at improving themselves. So I'm very glad that you said that.
Yeah. So that's number one. Number two, and probably always will be, is physical silver. I studied it for 4 years. I started buying heavily before I even thought of starting the silver business. Number three, developed real estate in mountain towns in the Midwest. And number four, undeveloped land.
Okay. What do you see in undeveloped land? Is it more like a food play, or is it more of somebody coming in and developing?
A multitude of uses, especially if it's zoned for business use or residential. But the carrying cost is low.
Yes.
In Idaho, it's typically 0.8% on a generously low valuation. So you don't want to get caught holding things with a high carrying cost. Holding dollars for 15% a year carrying cost with the devaluation of inflation. So,
and taxes, in Texas, I do own some land that we get the ag exemption on. So my counterparty risk of the government trying to come in and screw me on taxes is low, because they're not going to give away that ag exemption because they need to promote food production. So what we produce right now is hay for local farmers and ranchers to use for their livestock, and so we don't pay any taxes on that. It's a way for me to carry productive farmland that I haven't developed yet, basically no tax, no immediate tax cost. And then eventually, if we want to, we can develop that land where we can sell it without having that tax penalty. That's a good way to do it.
So looking at the bigger picture, it's holding a primary wealth. I mean, wealth can be divided, I think, into 3 or 4 categories: primary, secondary, tertiary, and you could probably go fourth into intellectual, maybe. But primary wealth being land.
What's your view? I'm going to ask both of you in turn. So, Chris, what's your view on where you see the general economy going in the first year? Or if you don't want to make a prediction, what are the headwinds and tailwinds that you see?
Well, the headwinds is what we said a few minutes ago, Rob, is that we've already had so much money printing and so much activity, legitimate or otherwise, we've borrowed or stolen from the future, that we have to have as, I think, our base case, that smoothing out some ups and downs in between. The economy, the stock market, everything underperforms for some time to come. We're going to have a stagflation environment. There's a real and present danger, especially if China can't manage its marketized default of Evergrande, as that's their term for it, as I've explained recently. We could still have it very easily a deflationary bust for a while before they pick us up and add a zero to the next QE program and we inflate again. But aside from that potential extreme, stagflation, a weak economy, and one of the only good things I can say about that, guys, is it's going to force people to actually be investors again, to use their heads, to not just mindlessly chase rather all the passive plays, all of the stuff that's popular, just because the Fed's got your back. When that has worn out more, now you're going to have to make decisions. Okay, maybe those pipeline companies yielding 6 or 7 or 8%, especially with an administration that doesn't really know what it's doing when it comes to green energy or any other kind of energy. We're going to have them around a little bit longer. Maybe they're not such bad places for your money.
Sure.
Maybe companies that provide the necessities of life. My favorite statistic.
You mean staples? We're going to get back into value in
My
staples?
favorite statistic that I've ever used, and I learned this over 40 years ago as a young, web behind the ears, young financial planner, is from 1929 to 1932 that from the top to the bottom of the market, the Dow dropped by 89%.
Mm-hmm.
1 out of 3 public companies were higher during that same period, even though the headline Dow was down by 89%. So ask yourself today, as we start, we've done it in fits and starts, we go back to that world where you've got to be a sensible, fundamental investor again and kick the tires and look for stuff that makes sense in a subdued economy with stagflation, whatever else we get. What are going to be those 1 out of 3 companies today or whatever? That's why I like uranium. That's why I like some of the green energy stories, because we are going that direction.
Whether we want to or
ultimately,
not. Yeah, we're going.
It's why I like the biotechs and the healthcare stories. There's a lot of good deals in healthcare companies. Even some of the real estate investment trusts. I just added a couple back to my list for people.
Now that's interesting, because that's especially in the commercial sector, a area that got hit really hard. And
real hard.
I wrote for Seeking Alfred for 12 years. 2 of the guys I followed were big REIT guys, and they were having a war back and forth over what was going to happen to the REIT sector. And there was diverging opinion there. It's interesting that you're adding some back to your portfolio.
I am.
Yeah. So what are your views on headwinds and tailwinds for the next year? What are you looking at?
I can't see any tailwinds.
Yeah.
I just can't see them.
Yeah.
They've been worn out already, haven't they?
So number one is to survive and not to lose any wealth that you have accumulated. That's your number one priority.
Warren Buffett's number one rule, right?
Because if you come through with the wealth you have now, and I mean purchasing power, the things that you need to buy, that you have to buy, if you come through with that, you're going to be better off than about 85% of everybody else. So actually, your purchasing power will have increased because there won't be anybody left with purchasing power. So there will be opportunities. So now's a good time to think, what's your exit strategy when you have carried your purchasing power through what's coming, to be prepared, because there may be just short windows, days or weeks, where you can buy things for pennies on the dollar. I mean, for example, I work in construction, have done all my life. A John Deere front loader costs $125,000 at the moment. In a crisis, there'll be companies willing to sell a brand new one of those for $20,000 because they'll take the cash off you, and the bank will just lose the loan because it'll be financed. So start thinking about opportunities. So let's not be too negative, because there are going to be plenty of opportunities.
So both of you think that there's going to be the opportunity to buy stuff low?
Yes.
And reinvest. There are going to be opportunities someplace. And just what those opportunities are, you said, are like identifying the ones.
And to a life-changing amount.
Yeah.
I think people who are even $1,000 or $2 in purchasing power, so I'm not talking dollars, but in purchasing power, that could be multiplied 10 or 100 times with a couple of smart trades with what's coming.
But you both think gold and silver could be part of that investment thesis going forward for my gold and silver fans?
I no question. I think gold, as I said a minute ago, Rob, I just added back one of our trading ETFs. More may come. Near term, I'm still worried a little bit about the stocks. I'm still worried about silver because, silver is, part base metal and part precious metal. And the doomsday scenario near term, this is not my base case, but just for sake of discussion, China, a lot of people still call a communist country, and yet they got into their current predicament by abusing credit more than Alan Greenspan or Jerome Powell ever thought of. And by enabling hubris and greed and private profit and graft more than anything Enron ever did. So this is their predicament. Now, they still have the benefit of being an authoritarian country that can, by edict, manage that decline. But for all of that, they can't fight the laws of mathematics.
Yeah, they can.
Okay? And so we're going to see a major retrenchment in China. Xi Jinping, who's all but emperor in name, only already, and wants that job for life, he's got to make the 90% plus of the people in that country who've been left behind feel like he really is going to re-embrace Mao's legacy and share this. So China's got a lot of retrenching to do, a lot of thinking to do. Unlike this country that can't make policy into next week, they're looking decades ahead.
100 years.
Decades ahead.
They do.
And they're very willing to take a step or two backwards if it's necessary to consolidate and then move ahead again.
Yeah.
So I think that near term, all of the base metals have great runs. Everybody at this conference and others have made a lot of money. I'm a little standoffish. I still have a lot of individuals and exploration stories I like, and I'm willing to tolerate the near-term risk. But I would not be heavy yet in the base metals, you know, to the point where you buy all this stuff and put it away, because you could very easily see everything get hit hard if China can't manage its decline. And we've got a government in Washington right now that we may exit 2021, and I've been warning of this possibility for months, with neither the allegedly bipartisan infrastructure bill nor this bigger Christmas tree, neither one of them becoming law. And the markets,
they priced it in.
They priced it in.
Yeah.
Okay. So, you know, be careful near term. You know, 5 years from now, 6 years from now, will silver, copper, uranium for sure, lithium, all these things still be in roaring bull markets? No question about it. Between now and next year, that's a coin toss.
Could have a pullback.
So be careful.
2022 could be an exciting year, basically.
Could be.
Yeah. Any last thoughts for you?
Yeah, I'd diverge a little bit on silver.
Okay.
Silver's been able to be controlled, manipulated, and the evidence is there, unquestionably, for over 50 years, because it's such a tiny market. This is a reason this manipulation will come undone, because it's such a tiny market. Wall Street Silver, 161,000 members and rising. The education that's available there and the way people are learning is crazy.
It's hit the network effect. It's become
yeah,
exponential.
so I just spoke to one guy. He's recruited 13 people who are now stackers. So it doesn't take many hundreds of thousands of people to understand how small the market is, to keep buying and holding, we will physically run out of silver, mathematically. And it will come down to just maybe 100 ounces each for a few 100,000 people.
And one point I wanted to add to that, I think silver's become so strategic industrially that companies are going to bypass minters and COMEX markets. You're going to go straight to the miners and start doing deals.
As Samsung are doing with Avina.
Right. Yeah, and that's going to happen. You know, Apple's going to do it. All the U.S. government's going to do it because it takes 500 ounces of silver to do one Tomahawk missile. Yeah. So they're going to keep, they're spending defense money. So everybody's going to cut their deals. And is it going to be a situation that somebody doesn't have a chair to sit down in? And what does that do to the silver market?
That's right. And the industrial users are very quiet about how much silver they need. I just found out that Samsung consumes 5 tons of silver a year.
That's a lot.
Now that's just Samsung. Yes, they're big, but someone could easily do the math. What proportion of which industry does Samsung have? Extrapolate that out and work out what the industrial consumption is. And it's only going to take 1 or 2 smart hedge funds to realize this, and then they're just going to buy physical like there's no tomorrow.
And you're going to have another Wall Street bets on your hand.
But permanent.
GameStop.
Permanent.
And then it goes straight up.
Yeah.
All right. Thank you guys so much for joining us. We're at the New Orleans Investment Conference with Chris Temple and Ian Everard. Thank you guys so much for joining us. We appreciate it.
My pleasure.
Thank you guys so much for watching today's video. We appreciate it. Please remember to like, subscribe, and share, and hit that notification button so you get those notifications when new content comes out. If you like what we're doing here, please consider supporting us on Patreon. Those members of Patreon will get extra special content delivered to them as well.